Anybody has the ability to turn $1,000 into $50,000, and I'm going to show you exactly how to do that in today's video. But real quick, as always, if you guys do find value in this video, make sure to smash that like button as well as clicking that subscribe and that bell icon. But without further ado, let's hop into the video. Okay, so in order to do this, what you want to do is every day you want to watch 4 different names in the market. Now, to be honest, it's completely up to you what you want to watch. However, what I'm going to talk about in today's video and what I trade the most are going to be the S&P futures, the NASDAQ futures, SPY, and QQQ. Now, the reason why I trade these the most is just I've noticed they respect technical levels a lot more than individual stocks like Nvidia, AMD, Apple, Tesla, so on and so forth. But again, if you like trading individual stocks, then you can. But for me, I make the most amount of money and I'm the most accurate when trading ES, NQ, SPY, or QQQ. So every single morning when I wake up, these are the very first 4 things that I look at. I always start on the ES futures and I do a top-down analysis. So what I mean by a top-down analysis is I always start on my higher time frames, such as the monthly time frame and the weekly time frame. Now there's a few different things that I'm looking for when I'm going through and plotting my levels. I'm looking for supply and demand levels, strong areas of support and resistance, as well as any Fibonacci retracements. So for example, as we can see right here on the ES futures, we have a really nice weekly demand right here. So this was an area I was watching going into this week right here and this week right here. And as we can notice, price came down, hit that weekly demand to a T before we pushed up into a new all-time high. So I'll start on my monthly and weekly, start plotting any levels. After that, I'll then break it down to a daily time frame. So if I were to be watching a setup next week, I know, okay, we have had previous resistance at this 6107 level. You can see we rejected it here, rejected it here, rejected it here, pretty much rejected it here. So if I'm going to be looking for a continuation in the market next week, I need to see us get above 6107.25. Once I'm done plotting my levels on the daily time frame, I'll then break it down to a 4-hour time frame. So right now, really the only level I'd be interested in is potentially this 4-hour demand that we have right here as a potential bounce based off of the 4-hour. Now, is there any other reject zones or any supply zones that we have up here? As of now, no, we only have that resistance. So after the 4-hour, I'll then break it down to a 2-hour. On the 2-hour, really not seeing a whole lot. After the 2-hour, I'll then break it down to a 1-hour. And again, I'm looking for any supply and demand areas, support and resistance, or Fibonacci levels. Now, once I'm done doing everything on ES first, I will then head on over to SPY. Now, the reason why I plot both SPY as well as ES is because ES trades 23 hours a day compared to SPY that only trades from 9:30 a.m. Eastern to 4 p.m. Eastern. So because the futures are trading 23 hours a day, sometimes we can get slightly different levels on ES than we would on SPY. And now here's also another very interesting thing. So a trade that I ended up taking today actually ended up being a bounce based off of a SPY demand zone. So as we can see on ES, I did have this demand zone all the way down here at 60.53, all the way down to 60.49. Now, as far as the ES demand zone, it got invalidated because it filled all of the orders. So notice how ES filled this entire demand zone. Now, if we head on over to SPY and we look at the same exact demand zone, we can see that price actually touched the very beginning of the zone before getting that initial push up. So again, because the way the two trade, sometimes you're going to see a level on SPY, sometimes you're going to see a level on ES. Plot both of them and then wait for price to trade to those levels and look for the reaction. So the SPY setup was a lot more clean than the ES. And again, just because the way they trade, sometimes it might take SPY longer to come down to the level. Sometimes it might take ES longer to come down to the level. It really depends on the scenario. But again, I start with ES, plot all my levels, monthly, weekly, daily, 4-hour, 2-hour, 1-hour, and then I head on over to SPY. Now, after that, I head on over to NQ, again, do the same exact thing, start plotting all of my levels. And then once I'm done with NQ, I'll then go and plot my levels on QQQ. And if you guys do want to learn more about my overall day trading strategy, I highly suggest checking out my second book, The New Age of Day Trading, The Ultimate A through Z Trading Guide, which is 320 pages. It goes over my entire day trading strategy, the indicators I use, setups I look for, Fibonacci retracement, sniper entries, risk management, and so much more. So again, if you guys want to check it out, The New Age of Day Trading, The Ultimate A through Z Trading Guide, officially on Amazon. The link will be down in the description. So now that I have all my levels plotted for the day, I then come up with a game plan. Now, as far as my game plan, we need to understand where are we trading in the market. So there was actually a really nice trade that we took yesterday on NQ. and it was based off of a 1 hour Fibonacci retracement. So we had this pivot low right here, pivot high right there. And I was watching the 50% and 61.8 for a potential bounce. So because price was so close to this 50% retracement, I had a good feeling that it was going to act as a magnet, price was going to pull back to it, and then we should ideally be looking for it to become support. Now, had price lost the 50% retracement, there was a good chance that it would then go down to the 61.8 and we would do the same thing, look for a reaction to take the trade. So as the market opened, it kind of consolidated there for a little bit, but eventually we did end up dipping down into that Fibonacci retracement zone. And once price dipped down into it, we got the elevation in volume, the nice long lower wick confirming a long entry with a stop loss right below this low. Now I did take this trade live in the Discord, and I also took it live on my YouTube channel. If you guys want to go watch the commentary, feel free. It was the live day trading from 12/12. Pretty much what I'm trying to say is as I get all these levels plotted, I then start running scenarios in my head and then formulating a game plan for the day. So let's just say that we ended up having a supply zone, let's just say somewhere up here. I would say, okay, so what I'm watching for today on NQ is either for a bounce at the 50% retracement or the 61.8. If we can get down to those levels, I'll be looking for a bounce, so bullish price action confirming volume. However, if price were to trend up into my supply zone, I will then look for a reject. But now another thing we need to keep in mind is if we bounce off of a key level, there's a good chance that we just go from level to level, which means going up into the next zone before price ends up rejecting and coming back down. If we lost this 50% retracement, we could look for downtrend entries until price hit the 61.8 and then look for a bounce. Again, the market is going to trade from level to level. So if we pull up my pre-market game plan from yesterday, you can see ES will watch this 67 level again for a potential bounce. After that, watching 6053.25 to 6049.75. And Q bounced 21625.75, and then if we lose that, 21580. So now again, if we go back to the hourly time frame and we pull up that exact fib, what level was that at? 21625.25. Or 75, sorry. And guess what? Same exact level. And then Google, my bounce was 191.12 and 189.5. We'll look for uptrend entries on all these names as well, just because the overall market has been strong. So I have all my levels plotted. I have my game plan for the day. The only other thing we have to do is wait for price to go to these levels. Now, if you're starting with $1,000, trading key levels is going to be your best friend. And why is that? Because if you are trading key levels, that is ideally where you're going to get the largest moves in the market. They're not key levels for no reason, but if price hits it and truly reacts to it, you should expect a larger than average move had you been trading something based off of, let's just say, like a 2-minute intraday setup. Price is only going to travel so far based off those 2-minute setups. However, if we come down to, let's just say, like a weekly demand in that ES example, and we hit it and we bounce it, we are probably going to get a very large move. So again, here is that weekly demand right here. And not saying that like you would have caught this entire move up, but just like, even imagine you just took like SPY calls or something like that and you swung it like 2 weeks out. This thing moved 247 points off of this demand zone, or actually a little bit more, which is going to equate to about like $24 to $25 on SPY. We got long at the beginning of that weekly demand. Price traveled about almost $25 to the upside off that level. So again, if you're a small account and you were to trade that key level, let's just say you only took one SPY option, obviously that would have been a very good return, regardless if you even only caught like $5 to $10 of the move. So I can't emphasize how important it is to watch these higher time frame levels, wait for price to trade to it, look for the reaction, and then take the trade. And you can even just day trade these if you really want to. That's what I'm doing a majority of the time, is day trading these key levels. But over time, because you're sticking to these key setups, and again, we can go back to that NQ example from yesterday, when price traded down to the 50% retracement right here. Say you even waited for the 5-minute candle to close. Well, had you done that, your entry was here. Your stop loss is always on the opposite side of that key level. So your stop loss was right below this low. And as we see, we push all the way up for about like 90 points to the upside. Even if you only traded like one MNQ, 90 points is about $180 profit. Now, if you were trading QQQ options yesterday, they probably moved about like at least 100% based off of that move right there. So again, you guys have the formula to grow your $1,000 to $50,000. The only thing you have to do is trade this plan. Every single morning, start on the higher time frames, break price down to smaller time frames as you're marking your key levels, formulate the game plan for the day, wait for price to trade to those key levels, look for the reaction, take the trade. Stop loss is always on the opposite side of the key level. But that's going to wrap up this video on how you can grow your $1,000 to $50,000. If you guys did find value, make sure to smash that like button as well as clicking that subscribe and that bell icon. It would mean the absolute world to me. Everybody have an amazing rest of your day, and I'll see you guys in the next video.